Hello everybody, in this video I'm going to be doing a brief stock analysis of Coke, and I'm actually doing a video on all of the companies in the Dow 30, so be sure to come and check out that playlist on my channel if you are interested. And I also wanted to let you know that this is not necessarily going to be a deep dive into their financials, but more so me giving my opinion on the company as well as the general outlook for the long-term future. So without further ado, let me get right into it. Here I'm taking a look at their 5-year chart on Yahoo Finance with their ticker symbol KO, not to be confused with COKE. But just about 5 years ago, they were trading at $41, and at their previous high, they were at $60. So 50% growth there for what's predominantly a dividend stock is, I would say, really strong growth for Coke here. And then they dipped down to $36, but considering how far the market fell, and the Dow in particular, I would say that's not actually too terrible. Here's what's a little bit concerning to me about Coke is that their revenue for the last 4 quarters has been steadily declining, and that's understandable for really Q2 of 2020, which we can't see yet on here. But a lot of their sales come from vending machines or Coke at checkout, from coolers and whatnot. And many people have not been out or not even been able to go out and do retail shopping and whatnot when they would be buying Cokes. So it's really understandable for their revenue to be down for Q1 and 2 of 2020. Now switching over to Robinhood, I just wanted to take a look at a couple of things here. So their 52-week high is 60.13 and 52-week low is 36.27. And this spread is actually really low, just about a $24 spread here, considering how turbulent the market has been. And that's predominantly because Coke is generally thought of as one of the safest dividend stocks there is out there. It just has a dividend yield of 3.46, but it's held by tons of really big dividend investors out there, such as Warren Buffett, and it also has a market cap of $201 billion. And that's partly because, or I would say even majorly because, it's thought of as one of the safest dividend stocks, even though the dividend yield is not extraordinarily high. And even though I would say a company like Exxon, which currently has a yield near 10%, I believe, is really, really safe, just because Coke is that much safer, a lot more investors that are putting millions or even billions of dollars into a dividend stock want the very safest brand out there, which would probably be Coke. Now, I also wanted to take a look at a few points by the Bears and the Bulls by analysts at Morningstar. The first positive point is that by volume, Coke is almost 3 times bigger than Pepsi and the global non-alcoholic ready-to-drink market. And because of this, they have major scale benefits compared to their competitors. And then secondly, the firm's vast marketing budget should help maintain consumer awareness and brand relevance, just because they have such a bigger scale than any of their competitors. They're able to maintain their brand across global markets better than any other company could even hope to. And you may be thinking that Coke is just the Coca-Cola product that you would typically think of, the red can, but Coke has so many different products out there. This is just some of the bigger ones. They really have dozens of different drinks that I couldn't even start to name. They also are really, really huge in water with their Dasani brands. And I also wanted to get back to the Morningstar analysts. Here are some of the negative points. The first one, I'm not even sure if it's really worth commenting on, but adverse currency exposure has recently been an albatross on the firm's reported operating results. And I think if currency exposure with their international brand is their biggest issue, it's not too big of a problem, just because they're so well known globally. So if that's their biggest problem here at the top, they're doing pretty well. And then the second point here that I would actually say is a much bigger problem is that the firm is still disproportionately exposed to the soda category, which is overall in a decline, with carbonated water type beverages really doing really well and on an incline. Coke does have a lot of juice and water type products, but they still do earn most of their revenue from Sprite and Coke soda type products. And lastly, I just wanted to take a look at the research report overview. They're given 4 out of 5 stars, which I would say is relatively fair just because they're near their fair value already. They have a wide economic moat because of their brand. It's probably the most well-known brand in the entire world. Low level of certainty, which is pretty rare here on Robinhood, but definitely agree with that. And they have exemplary top management. Again, go and check out that Dow 30 playlist on my channel if you are interested. Thank you so much for watching, and subscribe for more content.